The latest interest rate decision by the US Central Bank, the Federal Reserve, saw it hike rates by 75 basis points on Wednesday. As expected, markets liked it. Well, not so much the rate decision, but the press conference afterwards. We saw the Nasdaq have its biggest one-day rise in more than 2 years. So what next for stock markets? Are we going to see them continue to gain from here? Or is this just a short-term spike up before markets turn down? I think there are all sorts of trading opportunities after this Fed decision, and we'll go through the pros and cons for the Nasdaq and a couple of other markets in this video. Hello, I'm David Jones from Capital.com. I thought we'd do a video following, of course, the rate rise we saw by the Fed on Wednesday evening UK time. Lots of volatility across all sorts of markets. Initially, stock markets were under pressure, but finished the day really strong. If you look at the S&P and the Nasdaq, like I said, best one-day performance in more than 2 years for the Nasdaq. And I think there's some really interesting trading lessons from yesterday. First of all, the first move is often the wrong move. We saw markets initially sell off, but then we saw this really strong finish, particularly as the press conference got underway. But more about that in a second. And of course, it's got implications for the US dollar as well. We'll have a quick look at the dollar, but for today, we're mainly going to focus on the Nasdaq 100 index, see what the trade is. I've got 3 trades running on US stock indices at the moment. We'll take a look at those and see if there's a new trade to do on the Nasdaq. So I'll go through the pros and cons, we'll go through the recent news, look at the levels to watch, then we'll jump on the platform and get a trade on. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue to push out lots of different content on the various markets that we cover. And of course, every Friday at 2:30 UK time, just as the US markets are opening, I do a live stream direct from our YouTube channel. If you're subscribed with the alarm bell thing pushed, you get a message off YouTube just as we're about to go live. Right, let's get into it and talk about the Fed rate rise and the Nasdaq in a bit more detail. So first of all, the Nasdaq, as we know, all-time highs in 2021. Towards the latter part of 2021, we saw a strong bounce back by pretty much all global stock markets off the March 2020 lows when the COVID-19 pandemic first hit. Great rallies for at least 18 months, but this year has been somewhat different. So again, back to the Nasdaq, even though yesterday it had its largest daily gain since April 2020. So on Wednesday this week, it was up 4% at the close, biggest gain in more than 2 years. Doesn't really change the picture for this year. The Nasdaq 100 is still down 23% year to date. It's bounced off the lows for the year, but it's still down by more than a fifth for the year so far. Okay, so it's a market. Well, the question is it still in this downtrend? More about that in a second. So yesterday we saw another aggressive rate rise in the US, which was expected. So the Federal Reserve, the US Central Bank, raised rates by 75 basis points, which was the same amount they raised last time round. So it's the most aggressive attitude to raising rates since the early 1980s, which perhaps isn't surprising given the inflationary environment we're in now is at the same levels it was 40 years ago. So raising rates, arguably never really that good for stock markets. It makes borrowing for companies more expensive if they're looking to expand. So we did see stock markets under pressure initially, but in the press conference afterwards, and with these things, it's always the press conference or the minutes that have much more of an impact usually. The Fed Chairman Powell said that the pace of rate rises could slow. Okay, so he recognized they've been aggressive so far because they have been wrong-footed, they've been behind the curve, but he said it could slow down if the inflation and economic picture gets better. And he didn't believe the US was in recession at this moment in time. So something there to perhaps make investors start thinking, well, we're not at the end of the tough times, but perhaps from a market's point of view, we're starting to see a light at the end of the tunnel and it's not just a train coming our way. Clearly, dramatic moves yesterday. The backdrop is still the same. Inflation is still the big concern. Inflation's still at 40 plus year highs in the US, in the classic way of countering that is by raising rates, but not raising rates so aggressively and so high that it chokes the economy. That is still the balancing trick that the Fed has to pull off. So inflation still very much the focus for markets, but investors took some positive sounds from yesterday's press conference. Anyway, that's where we are. Strong finish on Wednesday. Let's talk about the numbers of the Nasdaq, then we'll jump on the platform. Quick look at the dollar, look at the Nasdaq, and see what the trade might be. So for me, the really important level in the short term, 12,950. That's the early June high. The market ran out of steam up there last time round and sold off quite heavily. So I think that's the real test in the short to medium term. On the downside, psychological support at 12,000 and 11,460 after that, the lows from middle of July. So some levels to watch. As usual, let's put some colour on these numbers. Let's jump on the platform and see what the trade might be. So let's take a look at this Nasdaq. Here's the move on Wednesday from the press conference. So the market was trading at 12.4 and then pushed up, traded as high as 12.675, tailed off a bit into the close. But like I said, I think the best day for the Nasdaq in a couple of years. Before we get into this in more detail, let's just take a look at some of the existing trades, because I do have quite a few stock market index trades on. So they're all the way down the bottom. So there's a short S&P trade that was filled in the last week. I'm happy to stick with that for now. There's a Nasdaq trade, US Tech 100 from a couple of weeks ago that's bought in at 11.62. The market's 12,500 and something. Stop is at 11.2. That was the original stop, 400 points away. So I'm going to move that just to 12,000, just to lock in some profit, keep that trade running. That's up a couple of £100. And then there is the Dow trade, US Wall Street, that was done at the beginning of July. It's been a really good trade, that. So bought at 30,400. The market's moved about 1,800 points in my favour. I'm going to bump that stop up a little bit as well to 31.5. So I'm up £650 so far. So we do have quite a mix of trades going on at the moment. Let's get back into the markets. So before we start our Nasdaq, I thought a quick look at the US dollar, because of course interest rates massively affect the currency. This is the dollar index. It's the dollar against a basket of other currencies. It made this multi-year high. I think it's almost a 20-year high, the middle of July. The market had backed off about 300 points from that. But for me, that dollar trend over all sorts of time periods, going back to May last year, and the sharper trend from February of this year is still intact. So for now, yes, we have seen some pressure on the US dollar, but we're not seeing a major US dollar sell-off yet. So this, as well as stock market indices, is going to be a really interesting market to follow throughout the summer. See what happens. Let's have a look at the Nasdaq. So this is where we are on the Nasdaq. This is a chart going back about a year for the Nasdaq. We saw the market peak in November of last year, up around 16,800, that sort of area. And of course, we all know the story since then. The story has been one of decline since then. We saw the market hit its low for the year so far, the 16th of June, traded down very near 11,000. We've seen a good recovery off that since then. Let's take a quick look at the RSI. We're not getting too much just yet from the RSI, but perhaps we are getting to an area where we have this idea of divergence again, where the market is pushing to a high. Did it push to a fresh high yesterday? Just about by 5 points, it pushed to a fresh high on Wednesday, but we've got a lower high in the RSI. So it can be a suggestion that perhaps the momentum is running out of steam. So I think it's really interesting up here, because on the one hand, if I zoom in, we absolutely have a good recovery trend in place over the last 6 weeks or so. That's still chugging along in the Nasdaq. So from a short-term point of view, I'd still be tempted to be a buyer on dips on the Nasdaq, which is why I'm happy to stick with that existing long position. But that trend is still down, and this is the area to watch. These old highs, 2nd of June, 12,940 or thereabouts. So for me, I do wonder, after the excitement of Wednesday, do we see the market perhaps start to think about turning around up here? So I do wonder if perhaps the more medium-term trade is to look to sell short. And that's what I'm going to do here. I'm going to take the view the trend is still down, and I'm going to sell short, but I'm going to put an order in to sell short. So I'm going to leave an order to sell higher up. If I zoom in, so I might put an order to sell if the market just blips a bit higher. Let's say 12.7. If the market blips to 12.7, I'm going to go short. And for a stop loss, I'm going to put it above this high in June. I think if we can break the June high, it starts to look as if this is a much more sustainable recovery than we've seen this year. So at the moment, I'm going to take the view that the market is going to start to struggle. I'm going to put a stop loss in at 13,300 on this trade. So I'm a seller at 12.7, a stop at 13,300, looking to see if the market rolls over again. Let's set that up. Right, I'm ready to go. So the market at the moment is trading at 12,536. What I would like to do is sell if the market gets to 12.7. So if it pushes a little bit higher than yesterday's high, I'm going to go short. If that order gets filled, put a stop loss in at 13,300, and the risk on the trade is around £300. That's it. Let's place the limit order. So that order's in, sitting at 12,700 on the Nasdaq. So if that gets filled, my stop will become active. And I'm quite interested to see how this works out. Absolutely, the trend over the last few weeks is still up, and maybe that's got further to go. But I do wonder if these early June highs are going to prove to be something of a problem, and we could see a bit of pressure back on stock markets after yesterday's enthusiasm. Let's see how it works out. That's it for this update for after the Fed rate rise and looking at the Nasdaq. I think it's really interesting given the move in stock markets. Is it going to carry on with this? I'm a bit skeptical. I think we have had a decent recovery over recent weeks. Perhaps it's time for some nerves to come back in. We'll see how things pan out over the next couple of weeks. See what happens with that trade. We'll come back, we'll do an update. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.